Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. What is EBITDA? Have you ever heard of that term? Similar to other professions, accounting, we have our own acronyms, and there's just some terms or some acronyms people have no idea what it stands for because it's used, but really in different circles, and particularly, depending on where you are with your business. So EBITDA stands for earnings before depreciation, interest, and taxes. And so that's a long acronym. And so the E stands for earnings, and earnings is just revenue minus expenses. Interest, pretty simple. Interest paid. Depreciation. I'm sorry, let me go back. Taxes. So taxes, just taxes paid, what the business has paid. Depreciation is the loss of value for particular assets. And I'll do another video regarding depreciation because sometimes that's a hard concept for business owners to understand. But depreciation, think about this. You may have heard financial advisors say this. Once you drive off in a car off the car lot, it loses its value. So if you purchase furniture, machinery for your business, as soon as you start using it, it loses value. So depreciation is recording that loss of value. And EBITDA is used for businesses that are looking for investors. And EBITDA is important for a couple reasons. So what they do is they look at EBITDA and they will compare your EBITDA to other companies in the similar industry. And so it's really used for comparison. Also, it's used to say, okay, you know what, do you have the ability to generate revenue? Where's the revenue coming from? Are you able to create earnings? And then also just provides an overall view of financial health. Once again, it's all based on what your sector is. And so there are reports, there's research, I'm sorry, yeah, yes, research that you can actually pull based on your industry and say, okay, the average EBITDA is this. Let me compare it to my business. So this is a term, once again, that is used a lot when you're looking for investors. So I know currently a lot of businesses, they want someone to invest in their business. So make sure you understand what EBITDA is, and then also make sure that your um, accountant or bookkeeper, they're actually calculating EBITDA, and you can start monitoring that number. So once again, I always say if you're looking at the data, it will allow you to be proactive. So instead of you getting in front of an investor, you don't know what the term is. And then also if your EBITDA is not comparable to those in your industry, you don't want that to happen in a meeting. But if you're looking at your data and understand what that term means, you can actually start putting together a strategy, how to increase earnings, how to pay less taxes. So definitely make sure you understand what EBITDA is. Once again, is for businesses that are looking for investors. So once again, investors really focus on EBITDA. So your homework this week, you know what? Look at your earnings. Look at your earnings for the last 3 weeks. So basically, that's your net income, or it could be your net loss. Look at revenue minus expenses for the last 3 months, and ask yourself what worked and what didn't work, and then how can I increase earnings. So you know what? That should take you about 30 minutes. I always say, you know what? Get a piece of paper, get a notebook, go in your accounting software or your bank statement, get revenue and expenses, and see where you are for the last 3 months. And then think about, how do I increase that revenue? Because it's all about increasing revenue, which you should be able to also increase cash. So if you find this information helpful, make sure you like, also make sure you comment and share. I will see you next time.